housing demand in the United States is still very weak. Existing home sales in May fell to a 6-month low, and RealtyTrac's Senior Vice President Rick Sharga is expecting the market to stay slow. He joins us now from Irvine, California. Rick, welcome back to Bottom Line. Always a pleasure to have you on.
Nice to be here, Mark.
Rick, have we hit bottom yet?
No. I think there's, excuse me, a little further to fall, certainly in terms of pricing and possibly even in terms of volume before we get through the end of this year.
Rick, in a healthy housing market, annual sales are usually in the 6 million range. Is there a possibility we may never get back to that number?
Now, real estate is cyclical, Mark, and demographic patterns indicate that at some point we're going to have more home buyers and probably get back up to that level of sales. We're in a very long trough right now, but you have to keep in mind the boom period that ended back in 2006 was also very, very long, and so it's going to take us a while to unwind.
But Rick, you do this for a living. You track this. You have your metrics. This is something that you study. For average Americans out there who are not seeing the light at the end of the tunnel, how can you break this down for them and let them know that there is room for optimism, even though you might not be able to see it right now?
Well, the fact of the matter is that we're still going to approach probably 5 million home sales this year, in spite of just about everything going wrong in the housing market.
But Rick, if I might ask that, who's buying those homes and where are they being purchased?
Fair enough. We were seeing a disproportionately high percentage of homes being purchased by investors and by first-time home buyers. There is virtually no move-up market right now. There's very little luxury market movement. There's no new home sales. So what you're seeing are people coming in at the low end of the market. Investors are buying with cash, and those first-time home buyers are using FHA loans. We need to do that to clear out all this distressed inventory before the market can get better.
Yeah.
But it's really only the first step.
And we'll get to that distressed inventory in just a moment. But when you're talking about the low end of the market, you're talking about homes that might be in what, the $100,000 range, but those who want that bigger home, $500,000, or those who want a jumbo mortgage, that's just not happening right now, is it?
Very, very little movement in the jumbo mortgage area. We see very little luxury buying going on. New home sales, which drive home prices up, are virtually non-existent. So again, it's going to take a while for that to correct itself.
Rick, if there are no first-time home buyers, how does that affect communities?
Well, it affects communities, obviously, from a housing standpoint, that you have inventory available that is just sitting there vacant. But there are also job issues in terms of building these homes that generates an awful lot of direct and indirect jobs. There are also revenue implications for the local municipalities,
right.
and revenues are down, which eliminates services. So it really is a very important part of the overall economic food chain.
Well, Rick, take us through the arc of what this is doing to the economy, starting with how declining home prices are keeping people from selling and then possibly moving to another part of the country to find a better job. Are we at a point now where people just don't think it's a safe time to buy and not just make an investment in their future, but in their children's futures as well?
Well, that's a great question, Mark. There are really two problems running at the same time. Our most recent research indicates that about 40% of current renters have decided they don't ever want to buy a house. So the sentiment toward home purchase is probably as low as we've seen it. The other aspect of that, though, is a lot of people are locked into their homes. They're
right.
either upside down on their mortgage, or they have no equity with which to buy another house.
Yeah.
So it really is a problem that's going to take a while for us to figure out.
And Rick, you've crunched the numbers, and according to RealtyTrac's figures, over 1 million homes are going to be lost to foreclosure this year. Is it safe to say that this is having a crippling effect on any potential overall economic recovery?
It's hard to picture a robust return of the economy without a housing market that's at least functional. On the other hand, it's hard to see a housing market coming back before we have true job creation and a return of consumer confidence. So it's a little bit of a symbiotic relationship.
Rick, in our last 30 seconds, the shadow inventory, what's that look like? And those are homes in the early stages of foreclosure, but they're not on the market just yet.
Well, worst case scenario, you have about 600,000 bank properties not yet on the market. You have about 1.1 million homes in foreclosure not on the market, and another 4 million homes that are in delinquency not on the market.
Yeah.
At current sell-through rates, it would actually take us almost 12 years to work through that inventory. Now, it won't be that bad, but that just kind of gives you an idea of the scale of the problem.
And Rick, before I let you go in about 15 seconds, where are we seeing at least some signs of hope?
Well, the markets that seem to be doing the best are places like Alaska and North Dakota that didn't have a lot of the artificial run-up and bad lending.
Yeah.
There are a couple cities, notably Washington, D.C., that are doing a little bit better, and places in Texas. But generally speaking, there aren't a lot of bright lights in the real estate market today.
Rick Sharga, he is the Senior Vice President of RealtyTrac, joining us from Irvine, California. Rick, it's always a pleasure. Thanks so much.
Thank you.